Investors are currently split on whether the bond market is signaling an impending recession or a unique buying opportunity. Financial analysts are tracking shifting yield curves that suggest uncertainty regarding future interest rates. For the average investor, this volatility could mean significant gains or substantial losses, depending on asset allocation. Experts are closely watching government debt auctions to determine the market's long-term direction. This tug-of-war between caution and opportunity remains the primary driver of current financial sentiment. Heightened tensions in the Middle East are causing immediate ripples across global asset classes, including oil prices and international equities. Traders are bracing for potential supply chain disruptions and increased energy costs that often follow regional instability. This shift impacts investment portfolios worldwide as risk-averse behavior begins to dominate trading floors. Investors must now recalibrate their strategies to account for the unpredictable nature of geopolitical flashpoints. Market stability will depend entirely on whether the conflict escalates or reaches a diplomatic resolution. The Federal Reserve is currently reviewing its monetary policy framework to address persistent inflation and cooling labor data. Central bank officials are debating whether to maintain current interest rates or implement a strategic pivot to stimulate growth. This decision directly affects mortgage rates, credit card APRs, and the borrowing costs for millions of American households. Businesses are watching these developments closely to determine their hiring and expansion plans for the coming year. The Fed's upcoming announcement will set the tone for the entire national economy. Financial analysts are projecting a strong economic performance for the United States throughout 2026. Experts cite stabilized inflation and resilient consumer spending as the primary pillars supporting this optimistic outlook. While the broader economy is expected to thrive, market participants are now evaluating how these conditions will translate into stock market gains. A healthy economy often leads to increased corporate earnings, which could boost equity valuations significantly. This positive forecast suggests a period of potential prosperity for both businesses and long-term investors. Global financial institutions are increasingly adopting the tokenization of real-world assets to streamline lending processes. This technology allows physical assets like property or commodities to be traded as digital tokens, increasing liquidity in emerging markets. By lowering the barriers to entry, this shift enables more small businesses to access capital that was previously locked away. The World Economic Forum highlights this as a critical step toward democratizing financial systems in developing nations. This digital evolution is expected to fundamentally reshape how credit is distributed globally. A new report from Deloitte details the major shifts expected in banking and capital markets as we head into 2026. The industry is grappling with rapid technological integration, stricter regulatory oversight, and changing consumer expectations. These factors are forcing financial institutions to modernize their infrastructure to stay competitive in a digital-first environment. Investors should anticipate a more efficient, albeit more complex, landscape for capital allocation. Adapting to these structural changes will be the defining challenge for banks over the next 18 months. Despite ongoing economic uncertainty, analysts are identifying specific opportunities within the U.S. financial markets. Current data shows that sectors such as technology and green energy are showing surprising resilience against broader market trends. Investors are being advised to look past short-term volatility and focus on long-term growth assets that are currently undervalued. This approach requires a disciplined strategy to mitigate risk while capturing potential market upside. Smart navigation of these conditions could provide significant financial rewards for patient investors. Economists are raising concerns about the rise of oligopoly finance capitalism and its impact on the free market. Critics argue that a small number of massive financial institutions now exercise too much control over global economic outcomes. This concentration of power threatens to stifle competition and limit options for smaller enterprises and everyday consumers. If left unchecked, this trend could lead to systemic vulnerabilities that affect the entire global financial structure. The ongoing debate highlights an urgent need for regulatory reform to ensure a fair and competitive marketplace. Yahoo Finance has released a comprehensive chartbook analyzing the state of the economy midway through 2025. The data highlights a complex story of fluctuating inflation rates, shifting consumer habits, and evolving corporate profit margins. These 35 charts provide a visual roadmap for understanding how the U.S. economy has performed over the last 6 months. By examining these trends, investors can gain a clearer perspective on the factors driving current market momentum. The findings offer a crucial baseline for predicting where the economy is headed in the second half of the year. While Europe possesses significant capital reserves, experts warn that the region's financial plumbing is outdated and inefficient. Fragmented regulations and legacy systems are preventing the seamless flow of investment across member states. Economists suggest that unifying these systems is essential to compete with global financial hubs like New York and Singapore. Addressing these structural bottlenecks could unlock billions in stalled capital and boost the entire European economy. Failure to modernize these systems risks leaving Europe behind in the increasingly fast-paced global market. Prediction markets are experiencing a surge in activity as users place bets on the outcomes of political and economic events. These platforms allow participants to forecast future scenarios, providing a real-time sentiment gauge for the public. While popular, the rapid growth of these markets has caught the attention of regulators concerned about potential manipulation. Proponents argue these markets offer valuable data, while critics warn of the risks associated with speculative betting on sensitive news. The industry's expansion shows a growing public appetite for betting on the future of global affairs. New analysis suggests that the era of the rip-off economy, characterized by hidden fees and predatory pricing, is finally coming to an end. Increased transparency laws and more informed consumers are forcing companies to adopt fairer business practices. This shift is expected to lower costs for families and create a more equitable environment for competition. As businesses lose the ability to rely on opaque charges, they must focus on genuine value to attract customers. This transition marks a significant win for consumer advocacy and market accountability. The Bank for International Settlements is monitoring significant shifts in financial conditions within the global system. Emerging risks, including high debt levels and changing liquidity patterns, are testing the resilience of international markets. Regulators are now working to implement safeguards that can withstand these evolving financial pressures. This analysis is vital for central banks as they attempt to maintain stability in an interconnected world economy. Understanding these conditions is the first step toward preventing future systemic collapses. As of May 2026, new business owners have access to a variety of credit card options designed specifically for startup needs. These cards offer rewards, cashback incentives, and tools for managing business expenses during the critical early stages. Choosing the right card can provide the necessary liquidity to bridge the gap between initial investment and steady revenue. Experts recommend comparing interest rates and annual fees to ensure the card aligns with a startup's specific financial situation. Selecting the correct credit tool is a foundational step for any new business venture. A new guide for 2026 outlines the essential steps for entrepreneurs looking to launch a business in the current economic climate. The process begins with identifying a viable market need, followed by creating a structured business plan and securing necessary permits. Experts emphasize the importance of digital presence and customer acquisition strategies in today's competitive landscape. For those starting out, understanding the regulatory and tax requirements is just as important as the product itself. This roadmap provides the clarity needed to turn a startup idea into a functional enterprise. Intel CEO Lip-Bu Tan is calling for increased investment in startups to drive future technological innovation. He argues that venture capital is the lifeblood of the modern economy, enabling new companies to develop breakthroughs that benefit society. Without this support, the next generation of industry leaders may struggle to bring their ideas to market. This call to action is directed at both private investors and government policymakers who oversee economic development. Startup investment remains a critical pillar for maintaining a competitive edge in the global tech race. Entrepreneurs without a credit history can now access specialized business credit cards designed to help build their financial profile. These products allow new business owners to establish credit through responsible spending and timely payments. For startups, this is a vital tool for accessing loans and other financial services in the future. Financial experts suggest that applicants look for cards that report to major business credit bureaus to maximize the benefit. Building a solid credit foundation is a key milestone for any business looking to scale. The Hershey Company has announced a new sponsorship for the Penn State Land Grant Startup Launch Competition. This partnership aims to provide students with the funding and mentorship needed to transform academic projects into viable businesses. By supporting this initiative, Hershey is investing in the next generation of entrepreneurs in Pennsylvania. Participants will compete for resources that can accelerate their product development and market entry. This collaboration bridges the gap between university-level research and real-world commercial success. Market analysts are declaring 2026 an ideal year for launching a new business due to cooling inflation and increased consumer demand. The current economic environment offers a unique window for entrepreneurs to secure talent and leverage emerging technologies. Businesses that adapt quickly to these favorable conditions have a higher chance of establishing a strong market share. While every startup faces risks, the economic indicators suggest that the reward potential is currently elevated. Timing remains a critical factor for success in the evolving 2026 marketplace. A new list of 35 business ideas has been published to help aspiring entrepreneurs navigate the opportunities of 2026. These ideas range from AI-driven service platforms to sustainable manufacturing solutions that address modern consumer needs. By focusing on these high-growth sectors, new business owners can better position themselves for long-term success. The list serves as a starting point for those looking to capitalize on current economic and social trends. Selecting a business model that aligns with future market demands is essential for any successful launch.